Good afternoon, grade 10s. We have to do our next year-end adjustment, which is consumable stores on hand. Right, now what is classified as consumable stores? This is stationery, packing material, cleaning materials, fuel and oil. That means anything that's used in our business that is an expense that we have an inventory of or stock of. So consumable stores is stationery, packing material, cleaning materials, or fuel and oil, an expense which is we have stock of. Right now, stationery or packing material or consumable goods or fuel is a nominal account. The nominal account will have a debit balance. That debit balance indicates that this is an expense. So this balance inside the account presents, sorry for my dog, very naughty dog, represents how much money we've spent on stationery or packing material or consumable goods or fuel. That amount does not equal the amount of that expense that we've used. So if we buy stationery for 8,500 Rand, that does not mean that we've used all of that. Right, now the adjustment tells us that stationery or packing material or consumable goods or fuel on hand at the end of the year. On hand means that is what is left or unused at the end of the year. Now, remember, any unused items will be kept for the next financial year. You are not going to throw the stationery away that you bought this year because you did not use it this year. You're going to keep it in your storeroom or in your stationery cupboard until you're going to need it next year. So, according to the matching principle, remember those GARP principles we did at the beginning of the year, you had to do on your own, remember? All this year's incomes and this year's expenses will be used to calculate this year's profit, which means that this balance of 8,500, which is the amount we've spent, must be adjusted so we can see what is the amount that we've used. And how do we adjust this? We're going to subtract the unused item. If you unused must be subtracted. And how do you subtract? By writing on the credit side. What do we call the unused items? Those are your consumable stores on hand, which means that you need to write in another account the debit entry, consumable stores on hand. This is a balance sheet account. Right. Remember that also according to the accounting cycle, all adjustments should be journalized. You just saw in the previous slide that we are going to debit consumable stores on hand and we are going to credit the expense account. Your adjustment will be whatever the expense on hand or unused at the end of the year. Then according to the accounting cycle, you know that all nominal accounts must be closed off to either the trading account if you calculate the gross profit or profit and loss if you calculate the net profit. Net profit, remember, is your gross profit plus all your incomes minus all the expenses. These accounts are expense accounts, which means it will be closed off to profit and loss. At the moment, remember the balance indicates how much you've spent. The consumable stores on hand tells you what was unused. So how much you've used, which will be your expense for the year. This part is what we use. I'm going to write with my mouse again so you can think what we have used. And that is the expense for the year. And that expense must be closed off to profit and loss. And that's the story for consumable stores on hand. I'm going to give you another exercise for homework for tomorrow where you have to practice depreciation, trading inventory deficit, and consumable stores on hand. You keep well, please stay safe and stay indoors. It's cold outside.